In the last 60 minutes, the silver market didn't move. It snapped. Silver ripped through the $95 level and the tape started trading like a fire alarm, not a commodity. And if you think this is just another metals headline, you're missing the real blast radius. Because the worst nightmare for Nvidia is not a new competitor. It's not a new regulation. It's not even a recession. It's a single industrial fact. The AI revolution is built on atoms, and silver is one of the atoms you can't swap out. Tonight, I'm going to show you why this 95-plus silver shock is a direct threat to the entire AI supply chain, why Elon Musk is signaling he saw it coming, and why the next shortage isn't going to be in GPUs, it's going to be in deliverable metal. What really happened in the last hour, why Nvidia needs silver more than Wall Street wants to admit, the Musk move, why Tesla plus SpaceX can bully the supply chain, the paper default problem, and why delivery is suddenly the only word that matters, what to watch next without getting shaken out by the noise. No hype, no wishful thinking, just mechanics. The $95 break the moment. The room changed. Here's the psychological shift. For decades, $50 silver was crazy. $75 silver was bubble talk. $95 silver? That was a meme. And yet, we watched it print in real time, and it wasn't a slow grind. It was a violent repricing that felt more like a liquidity event than a normal market. Why does that matter? Because when a market reprices violently, the question stops being, is this overbought? And becomes, who just failed to deliver? That's when spreads widen. That's when premiums detach. That's when the paper price becomes a suggestion and the physical price becomes the truth. Nvidia's nightmare. AI runs on silver. Now we get to the uncomfortable part. Silver isn't just a precious metal. In electronics, it's a performance metal. Silver has the highest electrical conductivity of any metal, which is why it shows up across modern electronics, from switches and connectors to advanced computing hardware. And here's the Nvidia connection. AI chips are not just silicon wafers. They're entire systems. High-density boards, thousands of solder joints, power delivery rails, high-frequency interconnects, shielding and thermal management. When you scale from one GPU to an entire server rack, then from a rack to a data center, you are scaling microscopic material needs into industrial tonnage. That's the trap. Nvidia can design the most advanced architecture on Earth, but it still has to be packaged, connected, cooled, and deployed. And if silver becomes scarce, you don't just get higher costs. You get allocation, you get delays. You get CEOs on earnings calls saying the quiet phrase that kills growth stories, we are supply constrained. And here's why this hits Nvidia harder than most. Nvidia doesn't sell chips. Nvidia sells time. Every month, a hyperscaler delays deployment is deferred revenue, delayed compute, delayed AI products, delayed government contracts, delayed everything. A $5 trillion story can't afford a metal bottleneck. Why silver shows up where power and speed collide, people hear silver in electronics, and they imagine jewelry-level quantities, like a sprinkle. But modern AI hardware is a brutal environment. Massive current draw, high-frequency signal integrity problems, heat that has to be removed continuously, electromagnetic noise that can literally corrupt performance. That's why the materials conversation matters. At high speeds, tiny inefficiencies become big losses. A little more resistance becomes more heat. More heat becomes throttling. Throttling becomes missed performance targets. Missed targets become canceled orders. And silver keeps showing up in the exact places where engineers can't tolerate failure. High reliability contacts. Silver is used because it handles high electrical currents efficiently. When you're pushing power through dense assemblies, you want the best conductor you can realistically deploy. Solder and interconnects. In electronics manufacturing, silver often appears in solder alloys used to connect components. Multiply a small percentage across an insane number of joints and the demand scales fast, especially in high-density computing where boards are packed like city blocks. Shielding and stability. As frequencies climb, shielding and interference control becomes a first-order problem. You're not just building a chip, you're building an environment around it where signals stay clean and clocks stay stable. Here's the headline. AI isn't one device. It's an expanding ecosystem of devices, and each layer needs material reliability. So when silver goes from available to tight, it hits the stack everywhere, not just inside one component. The Nvidia. Specific. Why this hurts at the worst possible time. Now add timing. Nvidia is in the middle of an arms race. Hyperscalers racing each other. Governments racing each other. Companies racing to build the next model before the next company does. This is not a market that can pause. Because in AI, delays don't just lose revenue. Delays lose leadership. And leadership is what sets pricing power, margins, and the entire narrative that keeps the machine fed. So when a material shock hits, it doesn't just raise the bill, it changes the negotiation. Suppliers start saying, if you want volume, pay now. If you want priority, commit now. If you want certainty, sign now. That is how a shortage becomes a tax on growth. What cornering means in 2026, not a cartel, a pipeline. Let's be careful with the word corner, because in movies it's a villain in a smoky room. In real life, cornering can look boring, and that's what makes it dangerous. It looks like prepaying for future delivery, signing long-term offtake deals, financing refining capacity, buying up available inventory quietly, securing private vault capacity, prioritizing shipping lanes and fabrication slots. No dramatic press conference needed, just contracts. And that matters because industrial buyers don't need to buy everything to control the game. They only need to control the marginal supply, the flexible supply, the deliverable supply that everyone else depends on during peaks. That's why the Musk angle is plausible even without a single official announcement. If Tesla and SpaceX secure a guaranteed stream, they don't have to win every auction. They just have to make sure the rest of the market has to fight for what's left. That's how scarcity becomes leverage. The Greenland spark. Why this is happening now, not later. One more layer. Why does this all explode right now? Because the market got hit from both sides. Demand side, safe haven flows are surging amid trade threats and geopolitical tension tied to Greenland and Europe. Supply side, export controls and licensing frameworks tighten the flow of refined metal into the global system. When those happen together, the market doesn't balance. It gaps. And when a market gaps, paper structures get tested. That's why the last hour felt like a system event. The Musk move, atoms over apps. Now let's talk about Elon Musk, because this is where the story turns from macro to chess. You said it perfectly. While big tech focused on software, Musk focused on atoms. In late December, Musk boosted a warning about China's silver export controls and added the line, "This is not good. Silver is needed in many industrial processes." That is not a normal CEO tweet. That is a procurement signal, because Musk runs companies that are brutally sensitive to physical inputs. Tesla needs silver for high-reliability electrical contacts and electronics. SpaceX needs silver across aerospace-grade electrical systems where failure is not allowed. So imagine you're Musk and you're staring at the same chart you're staring at. You see? A geopolitical shock hitting safe haven demand. Export controls tightening supply. And a market that just proved it can gap to a level nobody thought possible. What do? You don't argue on TV. You lock in supply. You prepay. You contract. You buy inventory. You remove uncertainty. And if you can secure long-term physical flow, even partially, you don't just protect Tesla. You gain leverage over everyone else who shows up late, including the Silicon Empire. The paper default, when the receipts fail. Now we get to the most dangerous part of the story. Most people don't own silver. They own a claim, a promise, a receipt, a line item, and receipts are fine until too many people ask for the thing at the same time. In the first half of January, reports and market commentary pointed to a sharp drawdown in COMEX registered inventory, on the order of roughly a quarter in a single week. Let that sink in. Registered inventory is the stuff that's actually positioned to be delivered. When that drains, the system doesn't explode with fireworks. It freezes. And when traders start whispering delivery stress, the market stops behaving like a chart and starts behaving like a warehouse. This is how paper markets die. Not with a headline, with a backlog, not with a crash, with a premium, not with a lawsuit, with a simple phrase, "Sorry, delayed." Now combine that with the current geopolitical spark. Trump's tariff threats tied to Greenland and Europe have been feeding a hard asset rush, and silver has been outperforming as traders treat it as both safe haven and mandatory industrial input. That dual identity is why silver is so violent right now. Gold is fear. Silver is fear plus factory. So when the world panics, gold gets bought. When the world panics and builds data centers, EVs, solar farms, satellites, and missiles, silver gets cornered. Why Nvidia can't just pay more. Here's where people get it wrong. They say, so what? Nvidia will just pay the higher price. No. In a true squeeze, price isn't the issue. Access is. Because Nvidia is not the end buyer of raw metal. It sits inside a chain. Miners, refiners, fabricators, component makers, board makers, assemblers, OEMs, data centers. If upstream players start locking supply, downstream players don't get a chance to bid on an open market. They get placed on allocation. That's why Musk matters. He has the cash, he has the urgency, he has the industrial footprint, and he has the willingness to treat supply like a strategic weapon. So if the rumor is even half true that Tesla is securing private supply that bypasses public markets, then the nightmare isn't just higher silver, it's a two-tier world. Tier 1, companies with guaranteed metal flow. Tier 2, everyone else fighting over scraps at spot plus chaos premium. If you're Nvidia, you don't want to be Tier 2 because Tier 2 can't ship. The real plot. AI is a metals war now. Let me zoom out. The AI boom has been sold as a software story, but at the scale we're building, AI becomes an industrial story, an energy story, a material story. The future isn't just code, it's conductors, shielding, cooling, transformers, power rails, and metals that don't care about your valuation multiple. And silver is sitting right in the center of that spiderweb. So when silver spikes from expensive to unavailable, the AI roadmap doesn't slow down because people lose interest. It slows down because the supply chain hits a hard wall. What you watch next. The plumbing checklist. If you want to understand what happens from here, stop staring at the candlestick and start watching the plumbing. Here's your checklist. Premiums. If physical premiums stay elevated while spot whipsaws, that's stress. Delivery chatter. Any unusual language around delays, substitutions, or cash settlement is a warning. Inventory and flows. Watch registered categories, not just total stockpiles. Export controls and licensing. China's controls matter because they change who can legally access flow. Industrial tone. Listen for procurement language in earnings calls, secured supply, long-term contracts, strategic materials. Spread behavior. Backwardation and weird spreads are the market admitting it has a physical problem. And most importantly, don't let volatility trick you into thinking the story is over. Volatility is what happens when a paper market tries to discover the price of a physical shortage. What this does to chips. The slow freeze nobody films. If silver stays tight, the damage won't show up as a single Nvidia halted headline. It shows up as a slow freeze. Component lead times extend. Board makers get put on allocation, assemblers prioritize strategic customers, lesser customers get pushed to the back of the line, data center deployments slip quarter by quarter, and then Wall Street does what it always does. It pretends it's temporary until it isn't. That's why this is a nightmare. Because Nvidia can't brute force physics. Nvidia can only navigate contracts, suppliers, and logistics. And if one player is buying metal like a national priority, the entire chain feels it. A quick reality check. No, this is not just a metals story. If you only care about stocks, you still care about this, because the modern market is a web. Silver spikes, hardware costs rise, deployment delays, revenue timing slips, guidance changes, valuations re-rate. That's the chain reaction. So the silver chart is not a sideshow. It's a dashboard warning light for the AI economy. Safety note. This video is a framework, not financial advice. Don't let excitement or fear make decisions for you. If you're exposed to metals or tech, manage risk like an adult and do your own homework. The threat in one sentence. Nvidia's worst nightmare isn't a new chip. It's waking up and realizing the bottleneck isn't silicon, it's silver. Because if Musk is buying atoms while everyone else is buying narratives, the last people to understand the game will be the last people to get supply. And in a world where AI is time, being last is fatal. If you want part 2, I'll map the exact chain, where silver enters AI hardware, where it can't be substituted, and which choke points crack first when delivery tightens. Drop one word in the comments: delivery.